So can you give me a real life example? I love numbers. And if you can give me a real life example of mortgage insurance versus life insurance on a certain age, amount, premiums, and so we can compare the two and give an idea to the consumer on like an example of premiums and all that.
Yeah, for sure. So we just did a mortgage for a couple. So I'm trying to use like an average couple with average mortgage size just for comparison. So for this couple, the male is age 33. And his mortgage is about $425,000, and I'm using a 25-year term. Okay, so that's because I'm trying to align with the mortgage amortization.
Correct.
Okay. Obviously, the consumer can choose a shorter term, but for a 25-year term for this male of 33 years old, non-smoker, his rate would be $35.19 a month.
Okay.
Now, if for some reason he can't afford that, which that's like just over $1 a day, right? But let's say for some reason he can't make that payment. We can always do a 10-year term. That would cost him $16.45 a month. So it's very reasonable. Life insurance is very reasonable to get, right?
And he's not a smoker, correct?
He's non-smoker.
And the spouse, in this case, a female, age 29, seeking the same coverage. She's at 25-year amortization. She's at
$21.04.
Okay.
So for female, it's generally cheaper. In this case, she's cheaper because she's female and she's younger. Okay, so that's why there's a price difference.
Yeah, it's always funny how females are always young. Price when maybe because we drive the men nuts. That's why. That's okay.
I don't know.
I know.
Many reasons. There are many reasons. So for same couple, their mortgage insurance for the male, it would be $55.08 a month. And for the female, it would be $36.72 a month. So you can see here for to compare prices alone, the life insurance is the cheaper product.
The better way to go.
Yeah.
I like explaining it this way. I don't like saying that it's cheaper because, when you say cheaper, you think it's cheap, right?
Right. In this case, cheaper doesn't mean less quality, right?
You're actually getting a better product because you're actually getting the money on it. It's not a declining balance.
Right. That $425,000 coverage will always be $425,000 regardless of how much the mortgage